Hey guys, welcome back to a brand new video. I'm RexFinance, and today we have a very special video to get into. But first, you gotta notice my color coordination here. Blue t-shirt, blue lights in the background. I don't get the credit I deserve for my artsiness. Is that a word? Probably not. But today, we're going to be talking about Bitcoin miners. And it's been a little while. This is overdue. If you have followed along on my channel, you know that I have been a bull on Bitcoin for a very, very long time. I've been a bull on Bitcoin mining stocks also for a very, very long time. And just recently, Bitcoin reached a price of $30,500. I can remember at the beginning of this year in my Discord server mentioning that I thought Bitcoin could have a quietly good year because nobody was talking about it. And even still today, nobody is talking about Bitcoin. It's nowhere to be seen in the mainstream news. CNBC, Bloomberg, on YouTube, you name it, it's nowhere to be found. And usually that is exactly when Bitcoin makes its next big run. And honestly, I think Bitcoin by the end of this year will be close to a new all-time high. I'll throw one example up on the screen now. I just saw this the other day, but literally people were messaging me left and right asking me if they should sell their investment in CleanSpark, who's a Bitcoin mining company, at $2 per share. In the $1 per share range, $3 per share. People were giving up hope on Bitcoin and Bitcoin mining stocks. I don't know if there was a single bull that I'm aware of. Let's see, this year when Bitcoin was down around $16,000. I usually paint a pretty bullish picture on my channel if you guys haven't caught on to that. In my own Discord server, the people that pay me money to be a part of my community, everybody in my Discord server was bearish on Bitcoin, saying it was going to go to $10,000 or below. It didn't happen. So unfortunately, along the way, I'm pretty sure lots of people sold out of their miners at the exact bottom, which is the way it tends to be, unfortunately. And to be fair, it's been brutal. Somebody bought Marathon Digital at, what was their all-time high? Come on, $75.92. And at the lows, Marathon Digital was down 95%. 95%. Riot Blockchain, not much better. If we go to the 5-year chart and go to their all-time high of $71.33, somebody bought this stock for $71.33. At their lows, Riot Blockchain was down 95%. CleanSpark, my other Bitcoin mining company that I personally own, from its highs in 2021 of $38.90 to the lows of 2023, which was right in here, was also down 95%. So literally, if you put $100 into one of these stocks at their all-time high stock price, you would have $5 left in your account. So it begs the question, will these Bitcoin mining stocks ever reach new all-time highs? Most of you know, if you follow the industry, this is a very capital-intensive industry. And we can look at, for example, the shares outstanding growth of each of these companies. Marathon, their compounded annual growth rate of their shares outstanding is 121%. So every single year, they are more than doubling their share count. Riot Blockchain is actually the best here. Their compound annual growth rate in shares outstanding is only 77%. So they're less than doubling their shares outstanding every single year, but that's still quite a few additional shares hitting the open markets every single year. In CleanSpark, my company that I own, their compound annual growth rate of shares outstanding is 142%. Now, to be fair to these companies, the money that they raised via dilution of shareholders, most of it has been used to grow their operations, which is kind of a flaw in the Bitcoin mining industry. You see, as more and more miners come online to the Bitcoin network, as more and more computers are mining Bitcoin, the network difficulty goes up, which means it becomes harder and harder to mine Bitcoin. So you're stuck in this never-ending cycle of kind of an arms race where you're diluting shareholders and trying to raise funds so you can grow your own production, but by growing your own production, you're raising the network difficulty because you have more computers online mining Bitcoin. And stack on 3 to 4 to 5 to 6 to 7 other publicly traded companies doing this, and this is really, really painful for shareholders. This is part of the reason these stocks were down 95% from all-time highs. Bitcoin mining stocks are the highest beta stocks in the entire stock market. What that means is if you have a beta of 3, say it's a beta of a 3, and the S&P 500 goes up 1%, the Bitcoin miner with a beta of 3 will go up 3%, and vice versa. If the S&P 500 goes down 1%, the Bitcoin miner will go down 3%. It's a double-edged sword where it's very, very nice in a bull market, but it really, really sucks in a bear market. But that being said, from lows, yes, Marathon was down 95%, but if you had the cojones to buy Marathon stock, you're already up 325% on your investment. For Riot Blockchain, it's very, very similar. You would be up 416%. With CleanSpark, it's less dramatic, but you would still be up 208%. So these Bitcoin miners are the most volatile stocks in the stock market. If you improperly time a buy or improperly time a sell, you will regret it. So why does all of this matter? Well, in my personal opinion, this time around, we're going to experience something that we've never experienced before coming out of a Bitcoin bear market. If you've been keeping an eye on the economy or the financial markets at all, you know that interest rates have gone up quite a bit, like 500 basis points. That's quite a bit. That's 5%, making the cost of borrowing go way higher. You also have the fact that because Bitcoin has been so young, I would say it's just now starting to mature, very few bankers have been willing to lend money to Bitcoin mining companies because they didn't want to assume the risk. A young industry, a young commodity like Bitcoin, that's as volatile as Bitcoin, is a very, very risky investment, but it's also a very, very risky industry to lend money to. However, as a result of all of these Bitcoin mining companies choosing to dilute and grow their operations during the bear market, they're going to have more borrowing capability than they've ever had before because there are more assets to the company's name that they can borrow money against. This means that for these companies, the cost of growing actually gets less and less over time when you consider Bitcoin maturing, bankers entering the space, willing to lend money. As these companies grow bigger and bigger, they get less risky to lend to. So in that aspect, especially as interest rates peak and come down, the cost of growing for these companies actually is probably already peaked. And because the Bitcoin mining industry is the most capital intensive industry in the entire stock market, I believe as we get closer to the Fed's terminal rate, as we get closer to cheap money, as the markets start to sniff out rate cuts or rate pauses, I believe the markets are going to flock to Bitcoin mining stocks to catch the upside here. Again, there's been no time in history that we can look back to and see a time period where Bitcoin miners were coming out of a bear market, but also had their cost of capital close to peaking. Now, yes, obviously we need Bitcoin to keep going higher for these stocks to hit new all-time highs. But because of what I've laid out here, I do believe that we are going to see new all-time highs for these stocks, especially if Bitcoin sets a new all-time high. So even though these stocks are already back up 200, 300%, I think this is still a tremendous buying opportunity if you believe in the longevity of Bitcoin. Now, if you're curious why I have a large percentage of my portfolio in CleanSpark rather than Marathon or Riot or other Bitcoin mining companies, I will show you really quickly. This is an Excel spreadsheet that I've put together that is available to my paid monthly members. We track the production of these companies, we track the efficiencies of these companies, we track the growth of these companies, and we compare all of that to conclude which miner best suits you. If you do want to join my membership and get access to this in-depth spreadsheet breaking down Marathon, Riot, and CleanSpark, hit the join button down below or hit the Patreon link in my pinned comment. But the first graph we're going to look at is Bitcoin production. Marathon's Bitcoin production has skyrocketed over the past year. CleanSpark's has kind of trended up slowly, so has Riot Blockchains. But Marathon is the fastest growing miner out there. We can also look at these companies' computing power, the amount of exahash per second they have to their name, and see the same thing. Marathon is the fastest growing company, not even close, and Riot and CleanSpark are growing less fast. And then this last graph just shows the number of mining rigs each company has active currently. Marathon is the biggest company here, and it's not close. So if you want big and fast growth, you go with Marathon. But if we dig a little bit deeper into the efficiencies of these companies, the first graph I'll look at is Bitcoin per exahash. So how many Bitcoin these companies mine per the amount of computing power they have. The higher the number, the better, obviously, and CleanSpark actually leads here by quite a decent margin. Per exahash of mining power, CleanSpark mines around 73 Bitcoin per month, Marathon mines 55, and Riot mines about 43. And then we can look at the amount of Bitcoin mined per mining rig each company has active, and CleanSpark narrowly is leading here too. This is another efficiency metric we can look at. Per mining rig, CleanSpark mines 0.007 Bitcoin per month. Marathon mines 0.0065 Bitcoin per month, and Riot is actually the least efficient when it comes to this metric, mining 0.0047, basically 0.005 Bitcoin per month per mining rig. So if you want efficiencies, which is what I'm after, because there's nothing that matters more than efficiency in the Bitcoin mining industry, you would own CleanSpark. CleanSpark would be the best option for you. This is not financial advice. This is just the way I look at things, especially in a very, very volatile industry with a very, very volatile commodity backing this industry. Efficiencies matter more than ever. You saw the least efficient companies, the least efficient Bitcoin miners go bankrupt last year when Bitcoin reached prices of 16,000, 15,000. And actually, by the end of this year, CleanSpark has plans to be at about 16.5 exahash per second of computing power on the Bitcoin network, which only is behind Marathon by around 7 exahash per second. But again, if you want the fastest growth and the biggest company, look into Marathon Digital. If you want the most efficient company with still pretty high growth, look into CleanSpark a little bit more. But with that, I'm going to end this video here. I hope you guys enjoyed this. Leave a like down below. I appreciate it. Comment down below which Bitcoin mining companies you own. I always like to see what my audience owns out there. Have a great rest of your day. Keep 10 toes to the ground. Keep your chin up. Stay blessed, and peace out.